Spadea. I am here with Alan Feigenbaum, who is the President and CEO of Advanced Financial Federal Credit Union. Alan, good morning. Welcome to New Jersey 101.5.
Good morning. It's nice to be here.
So we do a lot of conversations. We have a lot of conversations about finances and credit unions. And I always say on the air, my wife and I are members of 2 credit unions. We've never looked back. The products, the services, absolutely outstanding. But one of the questions that always comes up, and I wanted to put this to you, for our younger listeners, millennials who are just kind of getting started, some are trying to figure out what is the best way for them to save money, etc. How does your company deal with the millennials and their questions that they have about finance?
Well, obviously it's best to start saving early because all of a sudden, 40 years later, retirement comes upon you.
Yeah.
And the country actually has a bit of a dilemma right now with people. So it's always good for a millennial or anyone to have payroll deduction, and that $5, $10, $20 that comes out every week, you just don't miss it. And out of sight.
You're saying in terms of like an automatic savings plan, like just have a transfer of $5 or $10 every week going into a savings account.
Absolutely. Yeah. You just won't miss it. Whereas if it's in your pocket, you probably spend it. So it's just a great way to start out, and it's amazing how it builds up. Obviously, if your employer offers a 401k, you always want to contribute at least up to their match, and that's essential.
Do you find that people today are saving more, saving less? Are they more cautious with the changes in the economy, changes in the administration, or do you think people are they more confident today?
Well, I think a lot of people kind of park their money now. Obviously, we can't boast about paying high interest rates these days, although we do better than most. So I think in recent years people have been parking their money and just kind of wait. It's a wait and see attitude of what's going to happen next. And the older generation obviously has a concern about they all figured on earning 5% interest on their savings accounts for retirement, and that's not the case.
What's about the best you can expect today to earn on a savings account?
Well, on a pure savings account, it's probably, pure savings account's pretty low, but 1%.
Less than 1%? 1 or less?
Yeah, pretty much less than 1%. We'll go up to 1% for a good.
What's the best option for people that want to, let's say you've got somebody who's making a little bit of money, they put, let's say, $5,000 aside. Where would you advise them to park that if they wanted to save?
You should ladder CDs. Just put it in CDs, and if you're concerned about needing the money in the future, which when you're younger, when you're a millennial, you're going to need it to buy a car or buy a house. So what you do is you ladder your CDs. You do a 6-month, a 1-year CD, and you just have different expiration dates on them.
What about small businesses? I know you've been with the company now 13 years, and you were brought in on the commercial lending side.
Right.
What are you seeing in terms of small business growth? I mean, the politicians all have their talking points about what's happening, good and bad, in the Garden State. But what are you seeing from a perspective of small businesses coming to you to get started?
Well, to be honest with you, I do more of the real estate lending, side of things, and on occasion I'll do small businesses. What you find on the startups, entrepreneurial small businesses, they often finance themselves through credit cards. So on occasion over the years, what I'll do is after they've been in business a year or two and they're successful, and we'll consolidate those and get rid of that 18% or 24% rate that they're paying on the credit card. So we see a bit of that over the years and recently. I wouldn't say it's a strong environment, but I don't think it's not a terrible environment.
What do you recommend in terms of credit cards? I mean, you hear a lot of what I find striking is I work with a lot of millennials, both here and in my TV job, and I have to tell you they like cash. They love to use that debit card. They love to use this app called Venmo, where they're not using a credit card with interest, but they're actually taking cash out of their account. Is that recommended, or is there some value in actually establishing credit by using a credit card and borrowing that money?
You probably should do a mixed bag. You don't want to build up too much credit where you're swamped by it, but you do want to get a record, because those FICO scores are so key these days.
Yeah. You can't get it if you don't borrow money.
It seems that way. I mean, we'll make exceptions, and that's the value that we bring to the table, being small and can deal one-on-one with people. So we'll understand that, but so often the credit report and the credit score, which is called FICO score, is so instrumental. And you don't actually get a score if you don't have any credit card. So it's good to use them. And
what's your best financial advice for a new homeowner?
A new homeowner?
In terms of savings, in terms of credit, etc.
Well, you have to. Everybody has to watch their credit. It's so essential these days. And if you don't have clean credit, when you go for that 30-year mortgage through Fannie Mae or Freddie Mac, it's a disaster. They hit you with extra fees and higher rates and things like that.
Can you ever recover? You get, I talk to folks all the time, and you have people that come out of college, they've got all kinds of student loans, they've got a credit card, maybe they skipped a few payments and they get themselves in trouble. Is it ever too late?
No, it's never too late. You can always recover, and I'm not an expert on it, but in fact, it's hard to figure out these FICO scores, but no, you can definitely recover within a year or two, and that's often the case. People often do that.
Yeah.
So, yeah, never too late.
All right, Alan, thanks for the good advice. You've been listening to Alan Feigenbaum. I appreciate the expertise and the insight into finance. It's very complicated for people, and it's nice to know that there are good folks like you and strong companies out there in the Garden State that can solve problems and get people to that next step.
That's the value we bring to the table, and that's what we can do for millennials, and have someone they can talk to face to face. And where we come in is when you have a problem, and
right.
And all of a sudden, what do I do?
They ought to come and see you before they have a problem, so they start that relationship before it's too late.
It'd be nice, but
right.
It even happens in your family. The family never comes to you until they have a problem.
That's how it works. That's it. Alan, thanks for your time this morning. Good talking to you.
Okay, thank you.